The other day, I put out an episode called How to Really Become a Millionaire. And I mentioned that over the coming days, I'd be doing more content on how to make money. And not like how to make money, but like how to grow your money, how to build your wealth, and the stuff beyond normal, like this is copywriting advice, marketing advice, business advice to make the income, but instead how to take that income and turn it into lifelong wealth. And today we're going to dive into the dirty world of Reddit investing advice. And man, so like Reddit blew up, I guess this was a couple years ago, blew up with like meme stocks and GameStop and like all these stocks that people were getting super excited about because they were getting circulated on Reddit. And then people were like, they were like on a mission to like, I don't know, stick it to Wall Street by investing in these stocks that Wall Street hated and that Wall Street was shorting and all this stuff. And a lot of people seem to be making a lot of money for a while, right? But it turns out it was kind of easy come, easy go. And in the long run, that's what you're going to get into if you're following that kind of wealth building approach. So I was just looking for, I'm on Reddit a lot. I use it as a way to kind of like look at what the general zeitgeist is, what people are paying attention to. I have some subreddits that I follow. I don't contribute a lot to Reddit. I don't know, maybe I should, but I do pay attention to a lot of conversations on there. And one of the subreddits that I follow is stocks, like r-stocks or /stocks, and investing is another one and all of that. And I was just looking for some good examples of this because I've seen post after post after post after post of this. It's always what you see like after the market mania, after the bubble bursts, you see all of this like, oh, regret. Like during the bubble, you see, I'm a brilliant investor, whatever, right? I'm rich and all of you are suckers, right? But then afterwards, it's, oh my God, I can't believe how much money I just lost. So all that I did was I went to r/stocks and I said, sort by the most popular posts of the last 30 days. And this one came up that had a lot of people's examples in it. So I just want to share some of these because I share this in compassion, knowing that like I went through, maybe not with these same numbers, but I went through a similar learning experience really early on in trying to be a great investor. So this is the guy who started the conversation. He said he lost $90,000 gambling, and don't make the same mistakes as me. He said, I invested in meme stocks and traded options. Now I down almost $100,000. I am 35 years old and I only have $55,000 left to my name. I hope you guys are smarter than me and don't make stupid decisions. You won't get lucky. Invest in index funds and slowly keep accumulating wealth. This is not a get-rich-quick scheme. Years and years of saving straight down the toilet. I watch tickers all day long and stress over the tiniest moves in stock price, all for what? To get cleaned out. Don't be like me, kids. The market is not your friend in the short term. Have a good day. And then all sorts of other people were chiming in with similar stories. This guy lost $109,000. He says, oh man, oh, what's up, man? I had about 112K and lost it all the way down to about 3K. And am I very depressed? Effing heck yeah. Did I give up? You bet your ass I did. Now I'm at 1.8K. Or you bet your ass I didn't. Now I'm at 1.8K. So he's saying like, did he give up when he lost from 112,000 down to 3K? Nope. And now he's down another 1.2K. Would I do it again? F no. Right? This guy made and lost $280,000. This is like the appeal of it, right? You feel like a freaking genius when the market's going up, especially if you invest in something small and volatile that's making a ton of money in the short term. It's like, wow, I'm so smart, right? And then it turns on you. He says, yeah, I started with 18K and got it up to 280K. Rode it all the way back down to 2.5K after taking out another 10K loan to put in stocks. I have 2.5K in stocks and an outstanding loan of 4.8K. So this guy is negative after being up to $280,000. This guy was ready to retire at 25. So I was 25 and started investing in May 2020. It peaked at February 2021. I made $262K in 8 months, so my mind was thinking, God, in another 8 months, I can retire. Regarded, I know. Though it's okay saying you'd cash out at X amount. I was the same about setting a target, though it kept going up at a rapid pace. Then like formal said about the dip, it goes down and it's just another dip. You don't look at it every day and overanalyze because then it becomes emotional investing. Next thing you know, you're down 40% from the high. Again, you're thinking this is healthy and every stock has a correction. You're also taught never to trade in stocks, but to invest. So if you just hold on, you'll be grand in the long run. There's so many things that come into play that it's hard to put into words. Hindsight is wonderful. And I can remember the day I should have cashed out, live and learn. Hopefully, this guy doesn't say how low he got. And by the way, women do this too, but probably the vast majority of people who do this are guys. I don't know. Maybe it's an assumption. But I think that there's a lot of testosterone and stuff that feeds into this gambling in the stock market behavior. But hey, any one of these, because Reddit is anonymous, it could have been a gal, right? Like it doesn't have to be a guy, but I'm saying this guy lost 98K and gave up. Says, I lost 109K, put 20K back in, made it back to 90, lost all to 25K, made it back to 50K, lost to 11K. Screw this, I'm out. So much stress for nothing. So that's 5 stories, and it's 5 of like many. If you're gambling on stocks, which is what all of these people are doing to like have this kind of rapid up and down movement in their portfolios, if you're gambling on stocks, this is where you're going to end up in the long run. I mean, so few of us have the kind of advantage where we can actually beat the market for the long run. And it ties into, this is the ugly truth about being a little guy investor. It's really hard to beat the market. It's really hard. It's pretty likely that if you are in there trying to beat the market, if you're trying to outperform just like broad index funds of the market, you're treating investing like gambling. And you're probably, like, if you look at the amount of time you spend reading financial news, messing with your portfolio, all of that, at the very least, it's nowhere near your per hour pay that you could get just investing that same time in your current main money-making skill, right? But secondly, in a lot of cases, you'll just end up negative. So you are paying for the privilege of wasting your life gambling on the market, right? And it's easy to lose a lot of money, especially like the more bold you feel because of wins, the more likely you are to just, push it in a little bit, like put more money on the table, right? And we saw that with so many of those people, right? We saw that in their stories. It's so easy to lose a lot of money if you treat the market like a casino, right? Yeah. And it leads to an emotional mistake that will destroy your wealth. And this is like super important lesson for you if you are an investor. The biggest emotional mistake that you can make as an investor is making investing decisions from a place of regret. Oh shoot, the market's been going up. I got to get in on the bull market. That leads to buying at the top when prices are really high. Oh no, crypto has just spiked from $10,000 to $50,000. I better buy. That's what a lot of people do at the last minute, right before the market crashes. And then this is the other regret holding for the crash. So you bought at the top, you're hoping it's going to go up again after it starts to go down. And you're regretting holding on, and the price keeps getting lower, and then finally it gets so low you can't stand it anymore and you sell. And this happens over and over again. And across the board, research has found, and I'll be sharing more research on this in the next few days, research has found that individual investors underperform the market, and this is largely why. Because they're they're trying to beat the market. They're trying to catch up when they regret, either catch up the gains that were in the rearview mirror or catch up from the losses that are in their rearview mirror, right? And they just do it over and over again. And, I don't even believe that the people that said that they're done, that they're out, are actually done and out. But hopefully they just get in and learn their lesson and invest in a way where they're not trying to beat the market anymore, right? And that's the better investing advice. The better investing advice is the stuff that comes out after people have lost a bunch of money in the markets by trying to beat it, or by gambling and then losing. Like, you are in the best possible position if you gamble and lose young when you don't have much money in your account, and then you learn and you then take a much smarter approach to investing, which I'll talk to you about in the next couple of days. So, call to action to you, how can you use this? And normally every day I'm talking about marketing, business building, copywriting, all those good skills, how to make money through entrepreneurship and marketing. And now I'm talking about how to grow your money, and I will be for the next few days. I would encourage you to like and subscribe for either topic. You can subscribe here, check the links in the description. I'm Roy Furr. This is Breakthrough Marketing Secrets, and I will catch you again in the next episode. See you soon. Bye. Thank you once again for tuning in to this daily episode of Breakthrough Marketing Secrets. Remember, check out the links with this episode for even more value. Now make sure you like, comment, share, subscribe, and engage in every way you can to keep this show going and growing and delivering daily value to you. I'll catch you soon for your next big breakthrough.